recognizing when indecisive trading is relevant is very important in candlestick analysis. Today, the Dow, even though it traded up very slightly, it did a doji type day. Stochastics coming up. That doesn't give us any clue as to whether they might open it lower. Remember, if they open it lower on the doji rule, that means they're taking it down, and it looks like the T line has failed at the or acted as a resistance level. But indecisive trading becomes more relevant, as in the NASDAQ, when you can see where that indecisive trading is occurring. Right here where prices topped out before. So they had a gap up. Now they're showing some indecisiveness. This also becomes very relevant that if they open lower tomorrow, this level obviously is going to be acting as a resistance level. There's going to be some profit taking or selling for the short term. The same scenario can be applied to analyzing the S&P 500. Kind of a doji right here at the top, resistance level. And again, the doji rule makes it very simple. If we wake up and we find the pre-market futures are showing that the markets are opening lower, that's a good prospect that this level right here is going to be continuing to act as a resistance level. An indecisive market still puts a lot more credibility in candlestick patterns. As you can see what happened in Vera Bradley, a fry pan bottom breakout, creating a very strong price move. That pattern disregards what's going on in the overall market trend, and it's working off its own basis of a buildup of investor sentiment. That same scenario applies in ACB. Note the fry pan bottom and then the best friend breakout. Again, your best friend is a doji followed by a gap up, coming up through a resistance level, telling us there's probably a lot more upside now that you've broken out of the fry pan bottom. The nature of candlestick signals allows an investor to kind of anticipate what is going on in investor sentiment. Shorting Domo over the last couple weeks started to lose its prospects of being a good short when we started seeing a doji, spinning top, and then bullish confirmation or bullish trading when the stochastics were starting to curl up. Would this all kind of indicate that there was indecision down here in the oversold area, that if you were short, you definitely should be covering your short position so that you don't get hit with situations like this where the buying is starting to come back in. And that same information can be utilized for getting ready to go long to participate in big moves to the upside. Our DNT, you can see how when it came back to the 34, had a doji, bullish confirmation that could have put you into the buy mode on this day because of the bullish signals after dojis supporting at this level, making the next likely target the top of this trend channel. But one of the attributes of candlestick analysis is it puts you in situations where you have a much greater probability of being in big price moves such as this. That'll be it. We'll see you in the chat rooms.